morning everybody, it's Chris here from Serene Education with the 4 majors analysis update for the 22nd of June 2011. It's going to be going over the 4 majors this morning using our CTC strategy templates. So without further ado, I'm just going to look at the euro against US dollar on a daily time frame to give me an idea of what's been happening and what's likely to occur going forward. So first thing we see here is we always put in the major trend. Okay, once that's done, we can establish that we've seen price pushing back or pulling back to these levels over the past couple of months, and we've had, ever since we've had the high back here at the 14.9500 mark, we've seen price reversing to the downside, and we've seen lower swings. Significant one here back in early June, and since then we've seen price falling lower. You can see the progression. There we go, 100% of the initial move here. Saw a bounce forming a hammer. So negative trend to hammer where you see price action at a support level. Price action at the top end of the wick, forming a base, and then we've seen price reverting to the upside. And that's due to a lot of news coming out in terms of bailout plans for Greece from the European sector. So where does it leave us now? Well, yesterday we saw a bit of hesitation in the morning. But as the morning progressed and more news came out that things for the bailout plan for Greece was being looked at and studied, etc., we found that the market sentiment took it on board, and we saw prices trading higher. So last night it closed on the 50-period moving average, but nonetheless we saw a huge movement up, and what we want to see this morning is a continuation of that. Ideally, we want to see a break and trade higher than the previous swing. Notice here the failure to trade higher. We had a breakdown, a pullback, and then a continuation to the downside. This swing over here, it formed a swing. So ideally, we want to see price trading above that level. So anything above 14.4500 would definitely confirm that we're seeing further extensions higher. Notice, however, that the CTC, the whole principle of the CTC, is to see red, red, and red across the board. In this case, because we're in a major uptrend, you'll notice that the CTC is blue, and hence the reason why we're not getting a correlation. We've got a red arrow, red candle, but the CTC is still blue. This will only turn red as and when price breaks lower than the major trend. Until such time, it's going to give you the blue on either side. And all we need now is to see, because we're in uptrend and we're seeing a bounce on a major support, we want to see a blue arrow, blue candle, and the CTC will be in our favor. Ideally, if we break and close higher than 14.4500, intraday charts will have seen this, pick this move up, and we should see a continuation, if not to the at least to the 14.600 mark. So intraday, you'll notice that on an hourly, etc., you'll notice the CTC is blue, and we've had higher swings since the support was found. And as you can see, last night we had the Asian market trading. It kind of fizzled out during the US session. Asian market didn't take any further. We saw a drop last night, pulled back. That pullback was in conjunction with the prior resistance that we saw in the early part of yesterday morning's trading, and we saw a bounce higher. Now that's relative to the start of the trend last night or yesterday morning. We've seen a 61.8 fib retracement on an hourly, and we've now seen price revert to the upside. Most importantly though is the CTC is in our favor. We've got a red candle, a red arrow, but we don't have any red candles. It's just a heads up, and that happened primarily because we're trading at we saw a pullback after a high was posted. But most importantly is we're trading above all the moving averages on this time frame, and we've now, as of 3 o'clock, 4 a.m. this morning GMT, we've seen price pausing at a prior resistance level and pushing higher, confirming a new swing high, which is higher than the previous ones, so showing us the momentum is higher. Ideally, we want to see a price close above yesterday's trading range, so a high of 14.4220. Close above those, we'd definitely see further extensions higher. On to sterling against US dollar, good old cable. Let's have a look at daily. Here again, as with its counterpart, this pair, you'll notice we're in a major uptrend. However, you'll notice that just recently, I'll just make it nice and thick so you can see it, the uptrend. You'll notice just recently, after a pullback from the highs that we saw here at roughly the 16.7500 mark, We've seen price revert to the downside, being squeezed, a lot of indecision, a lot of movement in the past couple of days. But the most important one is the breakout. We've been trading higher for a long period of time above a major support area. For the first time in the last week or so, we've seen price break through, and we've seen a consolidation under that. As long as price fails to break higher and trade higher in this area here, the more likelihood what we're seeing is the start of a breakout, pullback, and then a continuation. We all know that things both here in Europe, well, here in the UK and in Europe, aren't all that great. And because price is now broken below that, it's just confirming that the CTC is now, all systems go for possible shorting opportunities. So you would look for a potential entry on a shorter time frame, i.e. your intraday. Daily, if you're interested in trading, obviously you would trade, you purchase this at the bottom end of this wick and moving south. But be aware though, at 1600 we have an all-time support and resistance level. If I just back up, you'll notice how many times this particular area has been tested in the past. Here, early January through the early parts of February, early parts of March, late parts of March. So very strong support and resistance level at this area here. So a break and failure to close higher than the major trend line, where price is trading as we speak now, would confirm a breakout, pullback, and then we expect the continuation in the direction of the trend. You notice we're having lower swings, which confirms that the trend is negative on a minor. The major trend is broken, so we should be looking for either price to break above that again to confirm that it's still back on track for further moves to the upside. A failure to do so, we'll see it test this intermediate trend line to the downside, which is a negative one. Price has broken through, so if we see correlation around here, any consolidation around here and a failure to break higher and trade higher as just a pullback in the direction of the trend, and we should see continuation lower. So we could see anything over the next couple of days, possibly going into next week. A failure at this area here could see 1600 on the money for things to happen in the future. So just be aware of it, guys. Just be very, very, very careful with this one. So we're going to look at the intraday time frames. Notice on a daily we're trading quite close to that major level. Look what's happening on a hourly chart. Price has failed to break higher for a significant period of time through the early parts of yesterday. Previously it was a support area, and we have the 200 period institutional moving average now above, and you'll notice that the last hour or so we've seen price trying to break higher than that and pulling back to the lower end of the wick. If this candle closes like this, it's just a confirmation of an exhaustion candle at a resistance level. An exhaustion candle at a resistance level confirms a strong indication that we're going to see a pullback occurring. So we should see a bearish setup occurring. You'll notice it'll be at higher swings, squeezing to that point that we are at now on an hourly chart. Okay, so we know this uptrend, this is a pullback that we've seen over the last couple of days since we saw the breakout lower, and we found support, and then we've now trading higher. But what's happened now is you can see price is now testing a 200-day institutional moving average on this time frame. A failure to break higher than this would also be a confirmation that we are seeing price failing to break above a major trend line on the underside, and we should see price kicking off to the downside in the direction of the breakout. So heads up, CTC might be blue, but if we see this candle here failing to break higher, just keep an eye on the hourly chart. If this candle keeps showing its wicks like this around a very strong resistance level institutionally wise, as well as on the chart, a major resistance at this level here at the 1624.50 mark, then we could see the start, or the potential start, of a consolidation and then a break to the downside. Next up is the US dollar against Swiss franc. Let's have a look at the daily trend for this one. As you know, that the US dollar is trading an all-time low against this pair, against the Swiss franc. Primarily everybody's been running to the Swiss franc in terms of safe haven, as the markets have unfolded over the past number of years since 2008, and we've seen the US dollar being one of them losing ground. We saw a breakout recently just above the 85500 mark, and we saw price pull back to the underside of that and continued to the downside into the early parts of June. Since then, we've had a full week of hesitation at a level this level here, just roughly around the 83.30 mark, if I'm not mistaken, and then a bounce higher. This was a bounce higher, unfortunately not back up to an area which we saw as a price support and resistance level at the 80.55 mark, and failing to break higher because we're still in a negative move. The market is still seeing that as negativity in the market, and we've seen price fall back down again, and that's where we're seeing price at the moment now, making a move way back down to the areas roughly around the 83.300 mark. So this is a high, lower than that, lower than that, so we know the swing is down. Notice this one over here though is up because we had a consolidation, then a consolidation, then a movement. So we know that the small time frame here, we're still seeing market direction pushing lower. So we shouldn't be looking for any upside movement until we actually see a break of the prior swing, i.e. above the 20 period moving average, and then we'd look at possibly the 855 mark as our first target. And that brings you back into play with the major downtrend. So intraday, you should see looking for possible moves lower. Here we go on an hourly chart. You can see the swing lows. Here we go. We've had a resistance level here going into the Asian market trading. You can see price has failed to trade higher than this level here. If I could just show you, yeah, just below the 84.2300 mark, which happened to be prior support in the past. And if I just move it over, you can see the support, breakout, pullback, resistance. Is that confirming now further downside movement because we've had lower swings in the past? If that's the case, then you're looking at, this is your first target at the 8400 mark, and ultimately if I just pull back, you can see here at 83,500 as your next target. So I've got two targets here. You can notice on this time frame here, the hourly, we've got all the moving averages above us, and we're having a blue arrow, but the CTC is red. It's just saying heads up, Chris. But as it stands now, everything bar the red arrow. We need a red arrow, and then we should be on our way again. So our daily first target would be 8,400. On our smaller time frames, you're looking at a 5 or 50 minute entry. 8,400 would be our first target. Second target would be down there at the 83,500 mark. No buying opportunities in a shorting if prices to the downside. Notice I've gone for the most touches bar this breakout here. That was a fake out. Most touches showing us the major trend on an intermediate hourly chart is negative. Daily, negative. Intraday, negative. Got to look for negativity in the market. Break of the trend and the previous swing would possibly give us an indication of upside movement. However, we have the 200 period moving average at that level, at a price support and resistance level above 84.50, and it would have to do a hell of a lot, or momentum would have to be far better. The news for the US dollar would have to be so good that to see that happen. Remember now, the news isn't all that great, and for that same reason, we should be looking for further shorting opportunities. Last pair of today is the US dollar against Japanese yen. Let's have a look at the daily time frame. Okay, we know that long term, the US dollar is negative against this pair. You can see that we're in a negative trend. Moving averages all above price, and the CTC is predominantly red across the bar. Bar a couple of blue ones. Those have been short-lived because they're not trading above the previous swing in this case. Notice that the trend just recently, since this year in particular, we've seen it starting to plateau. It's starting to the initial move isn't as great as it was when we saw back in April of last year. We've seen price still moving downside, however consolidating, because the 80 mark recently has been a very strong support area. We've seen a very strong support area being forged at this area here. Bar this intervention candle breakout here, we saw the markets really moving south, and then we had the Japanese government and the G7 countries intervening and purchasing the US dollar and shorting Japanese yen to do so. Even the Japanese government got involved. And then at the same time we had Japan being struck by a huge 8.6 earthquake and the resulting tsunami that after that, and the whole nuclear fallout of one of their nuclear facilities has seen price pull back and revert to the downside. Very strange though, because that's the US dollar that's being hit, not the Japanese yen. It's very, very weird how that, but that's just how the market reads things in Forex, and it's the underlying issue that everybody's interested in. Even though we've had the Japanese yen is very unstable, it is looking really negative in some parts, but overall there seems to be growth in that particular union. However, it's the US dollar that everybody's more worried about because it's a global currency. And as long as that's in case, then with things happening in the US as well as in Europe, there's more. People are more interested in what the US dollar is rather than the Japanese yen, and you can see that the US dollar is still taking flack, and it's now back below the institutional moving average as well as all the moving averages. And just recently, you've seen that the highs have got lower. These highs have got lower. So they're swinging lower in a downtrend. So the momentum is negative, and the closer we are being squeezed between 2 points, something's got to give. Something has to give. Can't keep squeezing, huh? The more it sits above the 80, the more likely it is we can see a bounce to the upside. However, we've got to realize that we're in a negative trend. So there could be a case in point where we could see a break to the downside. And if we see a close lower than the 80, then we're looking at roughly these areas along the way here, just below the 78.80 mark, and then roughly around here at the 7700 mark is the next possible target. CTC on a daily is showing all the systems go for further downside movement. However, we need to see a break lower. There's no point saying, okay, I'm going to get in now just because the CTC is all giving us the go ahead. Red arrow, red candle, red CTC bar above the top and bottom. No, because it's at a support level. Got to see a break lower, and then you enter at the lower end of the wick plus the spread. So you wouldn't have been entered here, so you would have been given a good entry here, but you wouldn't have been in because the candle didn't open lower than the full wick. Same over here, so you wouldn't have lost any money. Very, very important. So intraday, seeing consolidation, slight pullback. Notice in the 4 hour, for example, we have higher swings. Look at the 80, always mark the 80. You'll see that the previous swing low is slightly higher than the one we saw here on the 19th. So you can see the price is slowly pulling away from the bottom of this 80 mark. However, price is not making any higher highs. Notice here, for example, we had a resistance, a lot of wicks, indecision, more trading at the bottom end of the wicks, and then we saw a pullback. Then we had a reattempt of the past 12 hours, going to the 16th hour here. You can see price has got a long wick to the upside, but failing to break higher than that resistance level again. So, is that a ceiling we're seeing in play on a 4 hour time frame at the 80.23.96 mark? 20 period moving average in play, 50 period above it. All the moving averages above price. CTC is telling us we should be looking for shorting opportunities. Yes, looking for shorting opportunities if and when we see price breaking below the 80, because then everything will be in our favor. CTC template will be in our favor, but the chart will also be giving us a breakout of a consolidation range, and then we start looking at possible targets or to the downside because of that. So for this to remain bullish, well, to see further bounces to the upside, we need to see a break higher than this resistance level here. Failure to see a break higher than the 80.23, then we're not going to see any further progression high, and we possibly will see with a lot of these wicks over here, we'll see further downside movement for the US dollar in the next couple of days. That's it for today, guys. Hope you have a fantastic trading day. Make sure you follow, if you are using the CTC, make sure you follow the rules of the CTC, and you also back that up with very good money management. Too many people out there have great templates, they get great strategies, but they don't back it up with sensible money management rules. Okay. Other than that, enjoy the weather. I'm being very sarcastic because it's been pouring out here in Wales. But most importantly, enjoy your trading, keep it simple, and trade serenely.